Good morning, outliers. Welcome to today's Outlier Live, where we cover the biggest headlines of the day and what the AI trading data has to say about it. Our top story of the day is the first bank failure of 2024. And in my personal opinion, I think this is the first of many to come. And Wall Street has been buying up houses all over the place. But do you think that they're going to continue to be able to do so? There are people out there saying that this is about to end right now. So tune in for that and more on today's Outlier Live. All right, top story of the day. Republic First Seizure signals more bank failures to come. Experts are warning. Fears of contagion reignited by the first bank failure of 2024. Not at all am I surprised by this. Not at all. So I have the immense pleasure of consulting with many financial institutions, and so many of them are on borrowed time. They're on borrowed time because they have loaded up their balance sheets with so many investments that are long dated in duration. And as rates continue to climb, those investments that they put on when rates were basically near zero are losing value day after day after day. And if we actually do see rate increases, which is now on the board because inflation is not coming down, if we do see those rate increases happen, their investments are going to go down even more. Right? A lot of these investments are already worth 80 cents on the dollar, 70 cents on the dollar. And if they go down even more, we could be looking at 60 cents on the dollar. Now, if you're holding that to maturity, like if you're planning to just hold it until you get your investment back, that's not necessarily a big deal. The problem comes when depositors need their funds, and your custodian, you the custodian of those funds, have put those funds to work in loans and investments. You're not going to be able to claw the loan money back, right? You're not going to be able to take someone's car and then resell that and get that loan money back. So what you'd have to do is liquidate your investments. And if you have to liquidate your investments on $1 billion of investments, and you're only going to get $600 million back, that's a huge, huge problem, and something that a lot of banks are sitting on. A lot of banks, a lot of institutions are sitting on this powder keg right now, hoping that people don't know just how close they are to seeing their own financial institution, their own deposits blow up. Thankfully, we do have the FDIC, but that only covers up to $250,000. And if your bank has lots and lots and lots of accounts that are greater than $250,000, and they need to pay back those depositors, we're going to see a lot of problems really quick. And I don't know exactly what's going on with First Republic. We're going to look at it together, or Republic First. But I'm going to tell you right now that this is something that's going on pervasive in the industry. Republic First Bank, a regional lender out of Philadelphia, has become the first bank failure of 2024 on Friday. It was shut down by Pennsylvania's bank regulator and the FDIC. The FDIC quickly made a deal for Fulton Bank to take Republic First assets, but one expert in the financial regulatory reform and bank failure says the collapse could be a harbinger of things to come. I've been saying this for a while. This doesn't surprise me, because so many institutions have levered into these long duration investments. And those long duration investments at 3% are getting less and less valuable every day. And if rates go up even more, this is going to be widespread. If rates go up even more, it's going to be widespread. This bank failure indicates additional failures will occur and will range between smaller community banks and larger banks. The cause is twofold: higher cost deposits, right? So if you put your money into an institution, you used to be able to get, 5 basis points on your savings account, for example. Now I'm seeing savings accounts being advertised for 3.5%, right? 350 basis points versus 5 basis points, significantly higher, right? So higher cost of deposits. I don't think that is necessarily the issue here, but the low yield treasury securities and similar investments held by bank. That is the problem. That is the problem right there. Because when they go to withdraw those deposits, withdraw those investments, to cash out those investments, to fund those depositors who are taking their money out, and they can only get 60 cents on the dollar, that's not good. Right? You no longer have $1 billion institution. you now have a $600 million institution. And if wind of these shortfalls gets out into the marketplace, you will have runs on banks. And those banks are toast. They will not be able to satisfy all the depositor demands. And I mean, they can't already right now because of fractional reserve banking. Don't actually have all that much cash on hand. And what they could liquidate out of investments, they might get 60 cents on the dollar. And then they've still got a big portion of their book that are in loans that they're not going to be able to liquidate. So if this is starting to happen, I think it's going to be a domino effect, and it's going to be brutal. Regional banks have been struggling to retain deposits as customers seek the safety of larger, too big to fail rivals. And higher interest rates have diminished the value of their loan books. Okay, so same thing with investments, right? If you made a mortgage, like my mortgage is around like 3.5%. If I want to get a new mortgage today, it's probably 7%, maybe even more. My mortgage is worth less to the institution because they earn less on it. So because of that, if they were to sell my mortgage to another institution, they wouldn't get 100% of value. They may only get 70% of value. They may only get 80% of value. Because out in the marketplace, they can go get a new mortgage today at twice the rate as what my mortgage cost. Does that make sense? Right? This is all banking theory here. I love this stuff. I nerd out on this. I do nerd out on this all day, every day. Regional banks have been struggling to retain deposits as customers seek safety. Right. We talked about that. And the loan books could have unrealized losses and lower commercial real estate values. Oh my gosh. There are some institutions that are so freaking hosed. I know one in particular that has put on tens of millions of dollars in commercial real estate that there's a high likelihood they may never see that money again, because commercial real estate is a bottomless pit right now. Everybody's still working from home. The whole marketplace for commercial real estate has completely changed in the last few years. And because of that, anybody who's owning commercial real estate could be in huge trouble. Investors have worried about a possible contagion in the sector since three prominent lenders, Silicon Valley Bank, First Republic Bank, and Signature Bank, collapsed in 2023, which is exactly what happened to them. It's just happening now. New York Community Bank fell under pressure, was able to raise $1 billion last month from investors. I would not be one of those investors. The collapse of Republic First Bank has reignited fears of contagion. So let's take a look at Citibank, right? Taking a look at Citibank inside of Outlier here. We actually got a buy signal in Citibank. And, you know, that kind of fits with the narrative here, right? The too big to fail banks, getting a buy signal to go along with that. More people are going to be looking for these type of banks. More people are going to be looking to put their funds into somewhere where the government, as they have seen in the past and may see in the future, can come and bail them out easily. And that's not places like Republic First Bank or First Republic Bank or any other Republican First combination kind of a bank. And so Citibank may be the place where investors are going to, which may be why we got a buy signal here inside of Outlier. And in fact, if you look at it, we actually have a 16.99% return, not too shabby, 17% return in Outlier. But the buy and hold for Citibank is down negative 20%. Right. So you can see just how much Outlier outperforms buy and hold on Citibank here. Hey, I want to send you something cool, though, to help you learn how to trade with this, right? It's the free pre-market power-up checklist. I'm going to send this to you 100% free. All you got to do is go over to freetradingdata.com, and I'll send you our free pre-market power-up checklist. So let's take a look over at what the internet has to say about this, right? First Republic failed, and then Republic First failed. Is someone trying to tell us something? This person says, don't forget about One Republic. They haven't failed just yet. This person says, we need to start two banks, Republic, and First, to get to the bottom of this. That's pretty funny. Yes, I believe the message is vote Trump. Interesting. First Republic, first failed, Republic next. I hope not. First Republic didn't fail per se. Rather, the wealthy customer base panicked after what happened in Silicon Valley Bank, fearing balances that exceeded FDIC limits could be lost. Yes, exactly what we're talking about, right? If they lose money on their investments, they can't satisfy the depositors. They can't pay back the depositors. So that's exactly how the bank failed. 100%. Nailed it on the head, but I don't think he understood how well he nailed it on the head. Wall Street is buying up homes by the billions, but some people are saying a crackdown is looming. Now, my mother-in-law passed away in October, and we sold her house to what's that place called? Um, I cannot think of it off the top of my head. Jeez, it's one of those online places where you can sell the home and be on with it. Um, good gravy! I cannot believe I forgot that. Open Door. We sold it to Open Door, and it was honestly fantastic. It was so fantastic because we didn't have to do anything. I called them up, I gave them a virtual tour of the house with my phone, and um, they gave us an offer. It had a 5% commission fee for them to make repairs. And honestly, speaking to a realtor, it was not far off from what a realtor said we could get, but we could get it now. We could get it right away. We closed 30 days after accepting the offer. And that was awesome, right? We were able to get out of the home right away. Now, there's actually somebody already living there now. And I don't know if they're renting the place or if they bought the place from Open Door. I would assume that it's more this model right here, where a Wall Street investor has come through, bought the home, and has put it up for rent. That's what I think is happening. But lawmakers are saying investors that scooped up hundreds of thousands of homes to rent out are driving up home prices. I'll tell you what, her home, what do we sell it for? Like the sales price was like 260, but then they took out their commission, took out their repair fees, and ended up being like 220 or something like that. This house was like $130,000 house a couple years ago, right? So I wasn't mad about the price appreciation with that. Now more lawmakers want to stop it from ever happening again. Democrats in the U.S. Senate and House have sponsored legislation that would force large owners of single-family homes to sell homes to family buyers. A Republicans bill in the Ohio state legislature aims to drive out institutional owners through heavy taxation. I don't know. What do you think about this? Let me know in the comments what your thoughts are. I'm conflicted. I'm conflicted because it's a free market, and if Wall Street wants to buy up the inventory to sell out, it's nothing different than any other business, right? It's a total free market when it comes to that. But on the flip side of it, I get it because the homes that are available, right, are astronomically higher because the sellers are saying, hey, look, we're going to mark up the price, like my mother-in-law's house was able to. We're going to mark up the price because we're going to find a buyer. It may not be Joe and Betty moving into the neighborhood. It may be somebody from Wall Street. So my personal opinion is I like the ability for someone to have the American dream, right? Where the American dream is, home ownership, price appreciation. You're able to sell it or give it to your children for so much more money than you paid into it, dozens of years ago. And there is a real limited supply right now. Housing is one of those areas that people are struggling with, not just in the US, but also in other countries. My family and I are traveling to Europe soon, and I was watching different videos, and I watched this one video about Ireland's housing crisis. And I was talking about how housing in the country of Ireland is so unaffordable that nobody's buying houses anymore. And the ones that need a place to live, there was one apartment for rent, and they had a queue like a mile long of people to come and check it out. Now that's supply and demand at its finest, but it's supply and demand with people's lives. And that's where I kind of have a breakdown, right? I don't like the idea of having supply and demand with people's lives, people's livelihood, right? I talked to somebody one day who sold their home. This was at a financial institution. This person worked at the institution. She sold her home, made a good money or good profit on that, made good profit on it. And then she's renting her home, which is much smaller, for so much more than she was paying in her mortgage. And I'm like, why? What was the point of this? You're losing money every month now. So this is a real problem out there. I'm very curious to hear what your opinions are in the comments. Homeowner associations for years have sought to stop investors from buying and renting out houses in their neighborhoods. Legislative proposals represent a new effort by elected officials to regulate Wall Street's appetite for single-family homes. Isn't the whole New World Order thing, you'll own nothing and be happy? maybe this is exactly what they're trying to do. You're not going to own a home and you're going to be happy about it. Lawmakers say the investors have scooped up hundreds of thousands of houses to rent out, are contributing to the dearth of homes for sale and driving up home prices. They argue that investor buying has made it harder for first-time buyers to compete with Wall Street-backed investment firms with their all-cash offers. Yeah, for sure. I know there was a person here, so I live in Texas, who this was a couple years ago. This was pre-COVID. This was because it was in the office, right? It was 2018, 2019. He was just trying to buy a house and he couldn't. Every single house that came on the market was off the market within 72 hours with an all-cash buyer. Probably these investment firms right here, right? Investors of all sizes spent billions of dollars buying homes during the pandemic. At the 2022 peak, they bought more than 1 in every 4 single-family homes sold. So 25% at least. It's just being gobbled up. 2 of the largest home buying firms, Innovation Homes and AMH, are publicly traded companies, while a number of other companies are backed by private equity and other portfolios. Companies that buy single-family homes say their businesses provide renters the opportunity to live in desirable neighborhoods where they otherwise wouldn't be able to afford it. They got a point. They got a point. But it's also keeping homeowners out of those neighborhoods. So I'm just really curious. I'm conflicted in both ways because I see the free market aspect of it. I see how people are really pissed about the situation. So I'm conflicted. I don't know what the right answer is here. You tell me in the comments, what is the right answer? I do want to take a look at this one here. I was looking at different real estate stocks and I came across EXP World Holdings in the real estate sector. And we actually got a sell signal on that. When did we get that sell signal? Oh, it came through today. We got a sell signal today on XP. And I don't know, maybe this is one of the companies that is going to be on the hook once these regulations come through. And so people are saying, you know what, I'm going to go ahead and take my money and get out now. So we did get a sell signal on XP. And if you look at the performance summary, you can see Outlier has a 715% return. Holy moly. Versus buy and hold at 100.81. So Outlier is super outperformed buy and hold, 700% return. That's pretty awesome. You know what else is pretty awesome? I want to send you a free buy and sell signal every single day to your inbox. And the way to get free buy and sell signals sent to you every day in your inbox is by going to freeaitrades.com. And you'll get signals just like this one sent to your inbox so you never miss out. So let's take a look at what the internet has to say about this. Oh boy, here we go. Government crackdown on Wall Street buying homes from families. Wall Street has spent billions buying homes. A crackdown is looming. So I'm curious to see what these people are saying. Right, nice. Can't come soon enough. Unfortunately, I expect that whatever the sausage machine put out will probably be some bastardized version of what should be a simple 1-paragraph bill with exemptions, credits, and 10-year phase-in or some ridiculous equally ridiculous provisions. Always is, but it will be some sort of win from the sales. If some type of law passes, I guarantee there will be some type of grandfather clause. Let's see what else. Unless they go after the TikTok investors class, InvestBro. Hey, I would be considering this. An InvestBro with 4,000 doors and an LLC, this will do nothing. I don't have 4,000 doors. Too late. The damage is already done. So that's really interesting, right? I mean, if 25% of all homes are being bought out by Wall Street investors, who's going to be left to buy any homes? Are there any homes that are going to be left whenever they do come on the market? Hey, YouTube thinks you're going to love one of these 2 videos, right? I don't know how the YouTube algorithm works, but it says these are going to be awesome for you to watch today. Thank you so much for tuning in to today's Outlier Live. I'll see you in the next episode.